necessarily mean you need to increase headcount to do that. You can also use technology to do that. And some of that is coming through, particularly from the AI front. And that probably is going to continue. So I think the job creation, not looking for it to sort of fall off the cliff. But again, we're coming off from a very high level over the last few years. I think what you're seeing in the labor market is some normalization as well. We think that corporate profitability will remain intact. I mean, companies have talked about many ways to even circumvent and navigate some of the tariff headwinds, and we saw that through the second quarter earnings season, and we expect that to continue in the next couple of quarters as well.
Stick with the market cap S&P 500, or do you want to go elsewhere? The cyclical tilt's working the small caps over the last month or so.
I think, look, you stick with secular growth, add some cyclical exposure. We've been doing that through financials. You know, if we get rate cuts, but the right rate cuts in terms of the Fed is kind of what the economy still being resilient, then I think you can broaden it out to get even more cyclical exposure, and small cap could be an interesting way to do that as well.
Nadia, good to see you. As always on this Payroll Friday, Nadia Level there of UBS on an equity market, looking for maybe a bit of a cyclical tilt for the months ahead.
Yeah, and maybe we'll get some confirmation of that when we get the BLS numbers. But right now the question is, when will we get the BLS numbers? We would be 4 minutes and 30 seconds away from it, but evidently, sorry, we are currently experiencing technical
We'll
problems.
see if we do. Scheduled for 8:30 Eastern Time. The estimate in our survey, 75k. The range is pretty wide. 0 at the low end, 144 at the high end. There's a rate cut on the table for September 17th. Will this data reinforce the move we've seen from the Federal Reserve, the concern, the shift, the bias from the chairman of the Federal Reserve to tee up a rate cut? The jobs number are next.
All right. Eyes on the DXY today. Let's see. Alright, so we're 2 minutes away from NFP. Consensus is 75k. Previous was 73k. Unemployment consensus is 4.3%, so they're trying to say it's going to go up by 0.1%. But we'll see what the actual info is. I think both are going to be pretty bad, but we'll see. I really dislike what dollar's been doing here as of recently, so let's see if we get to escape this nasty range that we've got working with right now. Guys, if you're in the live stream right now, drop a like on the live, by the way. Drop a like on the live. Cost you nothing. And it takes less than 5 seconds. Alright, so I think for gold, if we can get price dropping, that would be good for business. Okay. I do want to see a drop, but I don't know how big NFP is going to move price. I think today we're going to have a look at gold today. Bitcoin's kind of already done what I wanted it to do anyways. So we'll leave it at that. I'll set some alerts though. Alright, we're 30 seconds out. 30 seconds, 30 seconds. If we can get a nice pullback, you know, take out Thursday's low or yesterday's low. I mean, the weekly candle's already bullish to us, you know what I mean? Very bullish candle. Monthly should be bullish as well. Yeah, we're just looking for a continuation, man. This is very, very bullish, so I doubt it's really going to make that much of a difference. Yes, Gift, how you doing, bro? You good? All right, 3 seconds. All right, yep, dollar's coming down. Gold's jumping. Okay, so whoa, yo. Okay, so wow, that's crazy. So NFP's come out at 22K. Mind you guys, the previous was 79K. They thought it would be 75K. It's come out at 22K. Unemployment has gone up as well. Decreased in. Let's just listen to Bloomberg.
August. That is significantly lower than the 75,000 anticipated. Last month, 73,000 revised up to 79,000. Change in private payrolls, 38,000. Last month, it was 83,000. The 2-month net payroll revision is another negative 21,000. We'll have to look and see what the breakdown on that is. But the unemployment rate, which is the thing the Fed is watching, moves to 4.3% from 4.2%. Labor force participation rate ticks up to 62.3%. Manufacturing payrolls down 12,000. We did expect that given what we saw with the ISM numbers. So at this point, there's nothing surprising except the weakness in these numbers. Average hourly earnings up 0.3 as forecast, but only up 3.7% on a year-over-year basis. So the non-farm payrolls, okay, I'm just looking to see some revisions popped up late here. But there's nothing more beyond what I told you. 22,000 jobs created, another 21,000 taken away from the prior 2 months of June and July. I'll get you more details. And it doesn't look like the markets are happy about this.
Yeah, Mike, appreciate it. Thanks for the update. We'll cross back to Michael McKee in just a moment. So it's a downside surprise, 22K, the estimate's 75. The range was pretty wide, 0 to 144.
Probably should have kept that Bitcoin move open,
now,
right?
Just 29,000 jobs. Month over month over month. Not good, and you see it reflected in the bond market. The front end of the curve yields lower by another 6 basis points. 2's dropped to 350. That's a new low for 2025. 10's down 4 to 411. 30's down 2 to 483. With a picture like that in the bond market, push it through foreign exchange. Dollar weaker, euro stronger. Euro dollar 117.35. That currency pair with a 0.7% move so far this morning. And in equity futures, initially a little bit lower off the back of this, and then Bramo pops higher, positive by 0.2%.
Yeah, and I'm looking at the Russell 2000 futures, and those also are up 0.25% in the wake of this. Honestly, this seems to be bad enough to make the Fed cut rates and maybe look at further rate cutting later this year, while not so bad that it would undermine the sort of cyclical tilt that we're seeing to the market. So putting that together,
let's take a look at the yields and
number, a really stagnant labor market, but not something that's raising alarm bells that we're heading into a recession that the Fed can't stave off.
Mike McKee, I want to come back to you, sir. Headline number, of course, downside surprise, 22,000, the estimate's 75. There's a great debate on Wall Street, as you know, about whether this downshift in payrolls growth is a reflection of what's happening with demand, supply, whether this is a cyclical turn or a structural shift. Mike, which one is it, and what does this data tell you this morning?
We don't have a good idea, John, and most analysts at the Federal Reserve are saying
bonds.
It's a
Bonds are
little bit
down,
of
man.
both. It's going to take a while to figure out exactly what's causing this.
So,
but
guys,
certainly
with
there's a
bonds,
lack
they
of
tend
demand.
to
That
go
would
in the
be
same
paramount.
direction
There's
as
also
the
maybe a
dollar.
lack of
If bonds are
supply,
coming
but we
down,
saw
usually the
in the
DXY is
JOLTS
coming
data
down.
now that we have more people who are unemployed than there are jobs openings. So it's now
these are the yields,
becoming
sorry.
a question of why aren't companies hiring? And for that, the logical explanation is the fiscal policies of the administration. I'm looking at the revisions, and June was revised down by 27,000 additional to a negative 13,000. So June is now a negative employment print. July revised up by 6,000 from 73,000 to 79,000. But this does suggest there's a lot more weakness in the employment area, in the employment side of the Fed's mandate than anticipated. And I would think that that negative June print would certainly put the Fed on the path to, at this point, be cutting by 25 basis points. I don't know if it's bad enough for 50.
You wonder if someone on their hand puts up their hand on the FOMC and asks for that 50. Mike McKee with the latest. Mike, I'll come back to you later. 22K then, if you're just joining us, the payrolls report did drop on time 4 minutes ago. 22,000 downside surprise, 75 was the estimate. You're looking at a 3-month average now for payrolls of just 29,000. Captured in the bond market with lower yields, in the FX market with a weaker dollar, in equities. Equities still positive on the session by 0.25% on the S&P 500. The Nasdaq still up nicely by 0.7. The Russell, after a 7% surge in August, up again this morning.
This idea that this could lead to a reignition of the cycle, and it goes back to the question that you asked yesterday. Is this a Fed that will be cutting into something of a reacceleration, or that will cut and spur that reacceleration?
Right now, the market, based on the market activity, so essentially,
that rate cut could be very helpful.
The last call to buy was yesterday. That was the last call to buy for EU. Looking at gold, the last call to buy gold was Thursday night.
First take is another weak summer employment report.
But, you know, being completely honest, it's not anything that we didn't expect, you know? It's not anything out of the ordinary. It's just what we expect to see happen. Even the consensus data was suggesting that, you know, the info is that the US market isn't doing well, so it's not anything crazy that we're seeing, you know. It's expected. I think we got FOMC next week, right? We should have FOMC next week. No, we don't have FOMC next week. Maybe it's the week after then. Got interest rate for Euro next week. Yeah, bro. Gold's just gone. Gold's gone. I did think, you know, maybe we'd get a bit of a pullback, but
stagnant or even go down, right? These are the signs of weakness that people look at on the corners and say, wait a second, there is something here that speaks to the demand side as much as there is this also supply side story.
Yeah, I mean, wages were fine, up 0.3%, which is an okay number, not a number that you would expect if the labor market was really falling apart. So what we're seeing is a combination of supply and demand. It's certainly not just a supply side story. Demand is also softened. But when you look for the months ahead, that demand should start to pick up as this tariff uncertainty starts to fade. So we had a lot of things, largely policy-driven, that hit the economy over the summer. That should go the other way later this year. But right now, it's a combination of a supply-side shock and also some significant hits to the demand side as well.
Mike McKee standing by. Mike, you've got some more.
Yeah, John, to the issue you're just talking about now, I'm not sure it holds a lot of water because the civilian labor force grew by 436,000 during the month, which is the biggest since April. And April was when the month that we saw the market, the labor data start to weaken. The participation rate actually ticked up. And at this point, it doesn't look like immigration played a big role. I have to mention here that the BLS cautions on its website and in its literature not to use the foreign-born, native-born population statistics to just tell you what happened this month, because there are statistical reasons that they don't. It's complicated. I won't go into it on the air, but I'm not sure.
All right, let's take a look at the dollar for now. So the dollar's just taken out this low here, which low is this? This is Monday's low, so we've just created a new low of the week. Yeah, we just created a new low of the week. we've had a bunch of failures to push higher, you know, on the dollar, just a whole bunch. And to be honest with you, this should just continue. Obviously, this is the last day of the week, and you know, with the price action and the closures that we're getting above these highs, it's indicating lower prices, right? If you take a closer look at these candles and their wicks, I can see here that we have a lot of wicks to the upside. We have a very high wick here. You know, at some point I did believe that, you know, price would at least come and close off that wick from 28th of July, the weekly candle. You know, we tried to go the next week. The week after that, we tried to go. We eventually closed bearish, and then we just haven't even come close. So, with that information, next week I'm going to look for a continuation of a bearish dollar. You know, we may get another pull higher, and then see if we can stretch lower for 21st of June. No, 21st of July's low, right? We're going to see if we can take out that low next week, and then see if we can get a new swing low, because we're not getting any other information to tell us otherwise, at least for the time being. Okay, which means, you know, the likes of gold may just continue, just keep jumping. Really, gold may just keep jumping. You know, we may see gold maybe slow down around 36. Right, gold may slow down around 36. You know, if the dollar keeps dropping, maybe we might see gold at 36.50. Heck, maybe even 36,700. Sorry, 3,700. So incredibly bullish, especially when we broke out here. That pullback, that's all we needed. Right. Stock markets are due to boom, guys. We're gonna see if we can get stock market to pop its high, you know, pop its all-time highs. Let me see the Nasdaq. Yeah, pop the Nasdaq's all-time high. Okay, so off the back of this news, yeah, guys, there isn't any trade right now. We're gonna see if NYSE provides us with anything, but it's not looking all that likely. You know, I did want to trade gold today, but gold's gone. I doubt gold's gonna pull back. Bitcoin's already gotten out of its you know, kill zone for a clean entry. I'd want to see it pop these highs, right? Maybe pop this high as well. What else is left then? That's literally all what we have left. I'm sure S&P is at all-time highs anyways. Yeah, and especially with this drop that we had just now. I mean, we'll see if NFP, sorry, NYSE stock open if we get a move lower. If we get a move lower, then we just need to keep buying this, to be honest with you. There really isn't any other answers except for that. We just got to keep buying it. I think we're just going to close off a really strong week. Yeah. Heck, today might just be a day to just not trade whatsoever. You know, we've had, what was it, 2, 2, 3? We've had a 6% week. Yeah, this week's been 6%. If we add Bitcoin to that,
be what most consensus views around Taylor rule implies. So that amount is kind of priced in. I think the uncertainty
If we add Bitcoin to that,
is, will that be enough? And do you end up pricing in, more than that? Right now, the kind of standard economic analysis, the Taylor rules,
mm,
path of cuts, but it's a shallow path because policy is only moderately
this looks rather
restrictive. And yes,
expensive.
change here is to the downside, the deceleration on the demand side. But as Powell's highlighted, this is also still a labor market that is, not tremendously out of balance. These are small increases. Yes, there are increases in the unemployment rate, but the supply side and the demand side are both easing at the same time.
Anyone got any setups?
In the wages, the persistent,
That reminds me. I haven't looked at GJ in a minute,
something we'll keep an eye on.
Is this GJ? No, that's GU.
And so that'll hold up.
Have I not got GJ here?
This path.
Wow, look at UJ. UJ has been chopping as well. It's really ugly, man. Since that buy from here, we've actually tested this area a bunch of times. Just got a bunch of buys from that level. From looking at UJ, this looks like a pretty decent area to go long from, but I doubt it. Dollar's just not looking hot right now. Let me look at JPY. Maybe we'll get something on there. GJ's been shopping as well, boy. That it looks nasty. Look at all these daily candles. Look how close they are to each other. It's not really trending right now.
Other data will come out, and we'll focus again on the other side, which is the inflationary side. And so this is really the tension that you see within the curve. That if the Fed
Yeah, it's not really trending right now.
Powell was pretty clear coming out of Jackson Hole.
Cool. Weekly.
In the dual mandate, the growth side, the maximum employment side of that.
Just taking out this high here.
At a time, and this is where the hawks.
Yeah, markets have been stalling as of lately, I think, everyone's been waiting for this rate cut. I think we're gonna, get on some real trends after this rate cut comes, The interest rates. I think that's gonna kick off the new year. For me, the year starts at September. From September to about July. That's the year. And just completely neglect August. August and its nonsense.
Consensus in terms of the expectations of steepening, and we've had a lot of that put into the curve already. So that may get a little bit tired, and you've got some technical positioning. Everybody's on the same side of the boat, so that can have an unwind. But the fundamentals behind a steepening curve outlook, cutting interest rates in the face of still sticky inflation on top of all the fiscal concerns, do argue that the pass-through from policy in the short end to the back end won't be as strong as we would historically expect, absent, the big shock of an economy.
Nah, chilling, bro. Was on the road, just got a yard now. Okay.
Not inflation, but deflation. That's how you get the back end to really outperform.
Jeff, appreciate it. Good framing as always. Jeff Rosenberg there of BlackRock. If you're just tuning in, you missed it. It dropped about 20 minutes ago, and it dropped. We're down to 22K. Big downside surprise on payrolls. The estimate was 75. I keep going back to the 3-month average. The 3-month average is pretty dreadful. It's 29,000 now. That's a real step down in payrolls growth. And Bremo, that's why you're seeing this market start to price in more rate cuts. We're down
22K, man.
Slowest pace of job growth going back to the immediate aftermath of the pandemic and what happened there.
We're at pandemic levels, guys. The dollar's currently at pandemic levels.
As we were just hearing from Jeff, that the Fed is willing to underwrite risk assets.
Mike Collins of PGIM, Fixed Income, joins us now for more. Mike, welcome to the program, sir. It's another downside surprise. You were looking for a weaker economy. It looks like we've got one. How does this change the conversation on September 17th for the Federal Reserve?
Guys, mind you, yeah, just 3 months ago in July, there was 147,000 jobs, new jobs being created, yeah. And only 3 months later, we're at 22K. Like, falling off a cliff. You know, the last time we were around these levels was November 2024. Right, what was happening in November 2024? Let me see what was happening. Oh, it was the US elections. Israel Hezbollah conflict, Russia invasion of Ukraine. Okay. I'm just looking at all this data. Or data, not data. 2023, 336K. February 2023, 517K. I'm trying to find those COVID results. Okay, so in January 2021, there was minus 140K. December 2020 was 245K. That's insane. COVID times are just insane. Look, May 2020 minus negative 20,557K jobs lost. April 701K. That's insane, man. Anyways, long story short, it's just not looking good. Fed's got a cut, man. Fed's got a cut interest rate. In my humble opinion, Fed's got a cut interest rate, guys. Stock market is jumping right now. We got for Nas, we got about 170 points till the upside. To be honest, if we could, I think the only thing that we could potentially take a trade on today is probably the stock market. I don't really fancy getting involved in Bitcoin again, at least for this week. We'll see where it's at on Monday. GU's already been jumping. I don't want to get involved in that. GJ just looks really, really ugly to me. I don't want to get involved in that. EU. Could get involved in EU, to be honest with you. Could. But I just think the stock market is going to provide us with a little bit more stability, especially with the back of this news that's come out. I think it's going to give us a little bit of an easier time. Um,
buy high quality, investment grade bonds
Yeah.
and structured product and even mortgage-backed
Wow.
securities in some cases at similar.
Look at these hourly
spreads.
candles,
They're
man.
not giving up a lot of spread. So those are easy trades that you still have to be disciplined and do.
Going straight to the moon.
It sounds like you're not worried
Yeah.
about politicization of the Federal Reserve. Just quickly, is that true? That's all noise to you? And you look at the data and this just indicates negativity?
Well, you look at the big picture trend, and that's what you have to do when you look at these data, Lisa. And, we went from 400,000 job growth a few years ago to 200 to 100 to 50. Our rate of job growth has been cut in half now for 4 straight years, and that's been the trend we've been expecting and looking to. Now you have this big change in immigration deportation policy, which kind of is a step function lower in terms of the labor supply. So now maybe 0 to 100 is not even the right level of natural rate of growth of the labor force. Maybe it's 0, right? It's the low end of that range, and we're kind of punching
toward that. So this is a big supply problem. But I'm worried that the markets are kind of discounting the demand side too, that the demand side of labor is weakening. And yeah, granted, if the Fed cuts 3 times this year, 3 times next year, gets the funds rate into the high 2s, which is increasingly what's being priced in right now, you know, the economy can certainly survive through that. Companies will survive through that. We won't have a recession, and that's a really good outcome for, you know, for all of us.
Mike, appreciate it. Have a good weekend. It's good to see you, as always. Mike Collins there of PGIM Fixed Income. Stephanie Roth of Wolfe Research still with us. Stephanie, you've talked about that re-acceleration in the economy. Is the Fed about to pour some gasoline all over that fire on September 17th?
Yeah, I think they might. But that's okay because the economy has slowed down. To the extent to which we have a little bit of easing in financial conditions isn't the worst thing. We have this shock from both the supply and demand perspective, but the demand side is important, and the extent to which it could help sectors of the economy like housing, which has been hurt by higher interest rates, it's okay for them to cut a couple more times. Then we're going to see that re-acceleration, and it might be harder for the Fed to cut beyond that.
I hope you're right. This is what we got from Steve Cheverone of Federated just moments ago, Bramo. This isn't about a September cut. It's now about the Fed's path towards neutral.
Right now, we're looking at 3 rate cuts being priced into the market by the end of the year, including more than a full 25 basis point cut at the September 17th meeting. This is about neutral. This is about where we are in the economic cycle. And this will be about what the Fed will do even before we get a change in leadership. So maybe President Trump will get what he wants, even without any kind of changing of the guard.
Mike Collins just happy we got a number. That's how low the bar is right now.
Well, I don't blame him. Honestly, we were getting warning signs, big red flashing letters. We have a data problem. And then, you know,
we've got some data. It's good news. Stephanie, it's good to see you. Thanks for being here. Thank you very much. If you're just joining us, you missed it. 22K on payrolls. Big downside surprise. 75,000 the estimate. 3-month average now 29,000. In the bond market, this is what it means to fixed income. Yields down at the front end by 10 basis points. 2s at 348. In the equity market, equities like it. Equities up by 1/3% on the S&P. All-time highs heading into the weekend.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
There is a nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook, take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from...
All right, we're just going to wait for NYSE open, guys, yeah?
The IPO was one dot in
just
one
got to chill.
on
This
that
is the boring part of trading at the end of the day.
This is a wonderful event.
If you're looking at markets, it's not always going to do stuff, you know?
You want to exist in 100
Boy, Bitcoin, I could have held that, John. Oof.
They think in like hours. Yeah.
I could have held that, John.
Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like a month.
Anyways,
there has been one
no point looking back, look forward.
I did something that was just for short-term stock, and I felt so bad about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we were not going to beat the quarter. We were going to probably just hit it, and so far we beat every quarter. So we were all like, wait, what? Our perfect record. We're like a 4.0 student that is going to get a B for the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that by itself was good enough to beat the quarter, but it's bad for the product. It's not good. After that, I never doing that again.
In case you missed it, on the close.
Sweet Green, which has a kind of a similar business model to Kava, they're having some issues, and it's more about just the foot traffic. Maybe the price points are too high, or people have just moved on to other types of ways to feed themselves. What are you seeing?
We're not seeing anything underneath structurally in the business. If anything, we're seeing greater structural strength. In recent years, we've now underpriced CPI by 900 basis points. So again, our value scores continue to improve. We continue to make our food more accessible and really try and mitigate mitigate any of the impacts of, say, tariffs and not have to pass along to our guests.
There's been a lot of talk about how do you reimagine stores like this. What do you want your customer to do?
If you're in a hurry, we've got great digital channels. We've got 60 drive-through pickup windows. But if you want a great physical experience, you can have that walk the line experience, see the food, smell the food, interact with our team members. Our mission is to bring heart, health, and humanity to food. So we want to deliver that humanity in the four walls of our restaurants and have a great environment for you to enjoy your Mediterranean meal.
Don't miss The Close, live every weekday.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Jackson Hole, Wyoming, and this is Bloomberg.
All right, we are off to the races again, betting on a Fed cut after that non-farm payrolls number. 30 minutes until it started trading. I'm Matt Miller.
And I'm Danny Berger. Bloomberg Open Interest starts right now.
Coming up, a cooling labor market. Jobs growth was far weaker than expected in August, reinforcing the case for a Fed cut later this month. And the trillion-dollar man, Tesla, offers an unprecedented pay package to Elon Musk that could make him the world's first trillionaire. And the AI chip race continues. Broadcom teams up with OpenAI to produce an accelerator that puts the heat on NVIDIA. Danny, what are you watching?
Well, it's been a drama-filled morning, and it's only just 9 a.m. I am looking at that Broadcom story and the reaction in share prices, because check this out, 14.33% higher. That Broadcom deal with OpenAI puts it in direct competition with NVIDIA, which dominates the AI semiconductor market. Broadcom also said its AI outlook will improve significantly. That helps ease concerns about slowing growth. Matt, what are you looking at this morning?
Yeah, I mean, that I think is fascinating. Broadcom should always have been included in the Magnificent Seven. The Great Eight. Tesla is another one. Elon Musk is being offered a compensation package valued at over $1 trillion if he meets certain benchmarks over the next 10 years. It includes growing the company's market value more than 8 times to $8.5 trillion. Danny?
Meanwhile, some data drama also adding to the market moves this morning. The Bureau of Labor Statistics warned that it was experiencing technical difficulties with its website just 30 minutes before that jobs report hit. Commerce Secretary Howard Lutnick spoke to Bloomberg about the issue.
So they need new leadership in BLS, that's for sure. They need new tech in BLS, that's for sure. And Donald Trump needs to rely upon the numbers. America needs to rely upon the numbers. You can't have these bent former administration people who have a view and who want to harm the president. We need accurate numbers coming from BLS, and finally we'll have new leadership to deliver it.
Well, we did end up getting the numbers, and it's a market that believes the numbers and is trading on them. Let's get over to Bloomberg's Michael McKee, international economics.
All right, new hour. We've got 28 minutes to wait before stock open.
Well, we got a downside surprise.
I wouldn't be surprised if this stock open just pumps, to be honest with you.
Lower than anticipated.
We'll try and get in for some buys pretty early if we get any sort of breakdown, any sort of bullishness. Try and ride the wave.
The June revision put it in negative territory, down 13,000 on the month, which means it's the first month of job contraction since December of 2020. The unemployment rate came in at 4.324. If you take it out to 3 digits, that's almost a full percentage point above where it was in July. So that is a significant move on the month. The revisions, as I mentioned, show a negative print for June, and that may be what really is moving some of the markets in terms of the idea of a Fed rate cut, because they are expecting at this point that to drive the Fed to 25 basis points, and even some analysts are saying 50. I think that's probably a stretch, but it does suggest that the president's economic proposals are not panning out, at least in the short run, and we did hear him last night warn that we could have troubles. The biggest movers in the numbers were health and social services, which, as usual, is the largest gain, 46,000. Leisure and hospitality, 28,000. Retailing, 10,500. A bit of a surprise, although I guess we saw a reasonably strong back-to-school season from what the analysts are telling us. Manufacturing, the biggest loser, down 19,000 jobs. Again, reflecting poorly on the president's plan to bring back a lot of jobs to the United States. What really strikes as you look at all of these numbers is how many categories did lose jobs, but it wasn't a whole lot in each category. It's sort of like the beginning, perhaps, of layoffs, but 100 here, 100 there in most of these categories suggests that there is definitely weakness in the labor market. So, leaving aside the president's claim that this economy is hot, which he's been making based on his policy changes, what about his argument that we need to cut rates, Mike? Because you have unemployment rising, you have average hourly earnings that are not rising as quickly, and you have PPI and CPI at the core 3.7% and 3.1%. So does it make sense to cut rates here? It does make sense because the Fed is looking at the labor market as a whole, and they're looking at the unemployment rate, which is their proxy for how the economy is doing. Go back to what we talked about a lot in the last couple of years, which was the SOM rule. If unemployment starts to go up, it starts to rise fairly rapidly. And as I mentioned, this was a fairly large increase in unemployment. So they are going to be worried that this trend will continue, especially with the ongoing uncertainty about tariffs and fiscal policy. And so it's definitely makes sense for the Fed to cut, and probably we will see an inflation increase next month. It's just not going to be large enough to throw people off the track.
All right, Mike, thanks so much for joining us. Bloomberg's Michael McKee there out of Washington on this Jobs Day. This afternoon, Chicago Fed President Austin Goolsbee will join Balance of Power. We'll get to hear his take on the NFP number and the rate situation. Let's turn, though, now to tech, because Tesla, the EV maker, has proposed a new pay package for the CEO, Elon Musk, worth around $1 trillion. Now, it does span 10 years and includes a series of benchmarks that Musk has to meet, including making a lot more money for his shareholders before he gets the full payout. So for more, we're joined by Bloomberg Tech co-host Ed Ludlow in San Francisco. And Ed, it's a striking number, but the benchmarks that he has to meet are also equally striking.
Yeah, the actual value of the award as it stands today is $88 billion. But over the 10-year period, if he hits those operational and financial milestones, the total value would be calculated to be around $1 trillion. There's some very heavy operational milestones. He needs to have sold 20 million Tesla vehicles, which is interesting in the context of the business model he has with Robotaxi. He has to sell or build 1 million Optimus robots, and there are market cap goals as well, taking Tesla's market cap to 8.5 trillion. There's also a consideration, Matt, which I know you took interest in, right, which is that in the latter part of the deal, the final 3 years, Musk has to participate in and align with the board on a succession plan. And he can only access tranches 11 and 12 of the comp if he does so. And that's really critical because he wants more voting power. And to get that upper level of voting power beyond 25%, that comes with tranches 11 and 12. So the detail of that in the proxy is really worth reading.
And the other thing you pointed out, as soon as this proposed agreement came out, was the fact that they are asking Musk to wind down his political involvement. What is the language surrounding that?
Yep, Section A51 in the proxy. This board basically says this is what our conclusions were. They met with Musk 10 times in negotiation and consideration of this package. And point number 2 is that they want to seek reassurances, and one would assume that they have, that he will wind down his political ambitions. At the same time, there's a very heavy suggestion in the filing that Musk's retort to that was, okay, give me the voting power. And so that's why it's structured in tranches over 12 years, with each of those annualized milestones giving him an additional percentage of voting power. It's really interesting. It keeps him focused. Same with the succession plan participation from Musk. It's very heavily centered on the final 3 years of the deal.
All right, Ed, thank you very much. That's Ed Ludlow. And tune into Bloomberg Tech at 11 a.m. Eastern. Former Tesla board member Steve Wesley will be joining the show. Now, on the earnings front, also speaking of Bloomberg Tech, chipmaker Broadcom reported a strong outlook. Shares, though, they're moving mostly higher on the news that it will build a semiconductor for OpenAI, taking on the likes of NVIDIA. Bloomberg Tech's other co-host, Caroline Hyde, joins us now around the desk. Caroline, just how big of a threat would this be to NVIDIA? Is this really them taking on the giant?
Well, this is what we've seen with the other key hyperscalers. Look,
Google designs its own chips with Broadcom. Meta's been in on the action. You've seen similar moves coming from Alphabet and indeed Amazon. All of the hyperscalers have decided that they need to have custom designed chips that aren't just totally dependent on NVIDIA's supply chain. So yes, they look to Broadcom. Broadcom here really showing that their backlog is huge. They already have been talking up how much more business they're winning from the 3 key clients they already had. And now there's open secret. We all kind of knew OpenAI and Broadcom were working together. But now a $10 billion order, that just shows that the AI scale and the opportunity for Broadcom is going up and to the right, and particularly showing that growth, as NVIDIA has perhaps been worrying investors with its growth plateauing a little bit. So more broadly, you are seeing Broadcom taking a bigger and bigger piece of that pie. Look, 10 billion is nothing to sniff at, and more broadly, we're seeing already shares up 30% year to date for Broadcom. That's better than any of the other Mag 7 names.
Well, if this chip is going to be powerful enough to rival Blackwell, or even, what's the next gen called after that? There's another. Rubin. That raises, to me, the concern that Huawei or Chinese chip makers also could be on the same path.
It's interesting about how they are ultimately becoming more and more specific for individual clients. And this is where people start to think, okay, it's not just about training ever more impactful large language models. It's about the inference. It's about the use case. So this is why you want more specific chips designed for more specific customers. And maybe that's where people think, okay, is NVIDIA still going to hold that chunk of change in inference as it has done in training? And that's something overall Jensen Huang has been trying to tell the market that yes, they can, and they are still the #1 compute member of choice. But I think people want choice, and you can't be so dependent on NVIDIA. Broadcom here will be alongside NVIDIA. I think you are seeing more and more of these companies having to deliver. You're right. Overall, people are wondering, how is China managing to evolve? How is Huawei? How is some of the other Capricorns starting to step up and make sure that China can be less dependent on NVIDIA? It's exactly what you're seeing at home in the United States as well. But for most people, this is an and rather than or to NVIDIA.
I think investors would also welcome a lessening of concentration risk. Caroline, thank you so much for joining us. That's Caroline Hyde. And of course, tune into Bloomberg Tech at 11 a.m. Matt, a quick check on futures, because we are trading at a record high at this moment after closing at a record high yesterday, but maybe more of the dramas in the front end. Yields on the 2-year yield down to the lowest since 2022. Gold is also at a record this morning.
Yeah, I think a lot of movement based on this number, and certainly traders are increasing their bets that the Fed is going to be able to cut. Maybe more and more. If you see this unemployment number continue to rise, that's a really worrying issue that even the hawks on the Fed are going to have to throw up their hands and make a move.
At 4.3%, the highest figure since 2021, but do cuts actually save that?
Coming up, we're going to ask all these questions of one potential Fed chair. BlackRock CIO Rick Rieder, is the CIO of Global Fixed Income there. He has had his name floated as one of the likely candidates. We'll ask him about that as well. This is Bloomberg. In case you missed it, on Bloomberg Open Interest.
When we look at our portfolio, we see an IPO pipeline that's the biggest since it's been in 2021.
In M&A and IPOs, we've actually had close to record performances in that space. We're going to have an interesting year.
We're having a lot more conversations around putting dates on calendars. I think we could see a very active second half of the year.
Don't miss Open Interest live weekdays.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with more episodes of our show, The Deal.
The theme of this season, On the Road. We're bringing you more behind-the-scenes conversations with the biggest names in sports, business, and culture, like Melody Hobson.
I started to study women's sports like an 11-year-old studies baseball statistics, and I got dangerous in seeing up arrows, up arrows.
Susie Wolf.
When you're competing, you're not thinking about any fear or any worries of what could happen.
Josh Harris.
You can't do a good deal with a bad person.
Jay Batt.
At the end of the day, there's never been a better time to be a student athlete.
And more. Stay tuned.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Joanna Bersecci in Vienna, and this is Bloomberg.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Heading for a second day of a record close, this time thanks to rate cut bets with a 3-month average of jobs added, the lowest since the pandemic. The unemployment rate goes to 4.3%, the highest since 2021, and stock futures up 0.4% for the S&P. The 2-year yield down a
Yes, Joe, money day, my bro. How you doing? You good?
To the lowest since 2022.
See, you
Let's
just
get
jumped
the
in.
reaction now of BlackRock Chief Investment Officer of
We're just
Global Fixed
waiting
Income.
for stock
That's
open
Rick
because there's
Reeder.
nothing
Rick,
else to
great
do.
to see you this morning. Just your initial reaction.
No
to the
trades,
data
no
just
nothing
under
just
an hour
yet.
ago.
Yeah, I mean, listen, it's a pretty remarkable, I mean, I always focus on the industry data to try and get a sense for what is the fabric of what's happening here. So if you look at the numbers, we got 22,000, but we talk about on the show all the time, 46,000 was in healthcare, not cyclical. You have a dynamic where if you strip out healthcare, you're running negative, what is that, negative 24,000 jobs. If you take the 3-month, 4-month moving average, we're looking at 29,000 jobs, with healthcare being 59,000. So if you strip that out and you look at what's happening to the broad economy, you have an economy that's, you have an economy that's actually doing well. You have a job market that's actually soft today. And, I think it's pretty remarkable. We talk to a lot of companies. You hear the same thing. Top line revenue's pretty good. Economy's okay. Consumer's pretty good. But you're actually doing things with lower costs. With
Happy to
lower
be
human
back.
involvement,
Yes,
with
sir. Happy to
technology
be back
evolution
for
of
sure.
productivity, and you just see it play out.
For
People
sure,
think
for
what's
sure,
gonna
for
happen
sure, my
2
bro.
years from now. Listen, I think the labor market is soft, even though the economy is actually in pretty good shape, meaning the Fed's got to cut. And the Fed, I think the Fed could cut 50 basis points. I think they should cut 50. But I think the door's open. And, how much more data? You see, by the way, you saw it in the JOLTS report as well. You look at job openings, and the area that's held up the job market has been leisure, hospitality, healthcare, and you're seeing those areas soft now. So it's time to move.
Rick, I can understand maybe cutting some jobs, especially with the advent of AI. Hopefully that's driving productivity. On the other hand, if the economy is growing, shouldn't employment growth be there as well? Shouldn't hours worked be moving higher?
So no, I don't think so. So if you look at one of the data, a piece of data I love looking at. So the big 6 companies. So I take the Mag 7, you take out Tesla, and if you look at what's happening to their employment dynamic, those companies are throwing off. And by the way, we see it through earnings, we see it through capex and AI, and then you look at what's happening to their employment picture. They're actually, you see many of them actually cutting jobs. What's happening? You run a more efficient business. You drive higher free cash flow. By the way, you can buy back your stocks while these stocks continue to do well. The companies are doing fine. The economy's doing fine. We're entering an era that's quite frankly very different than anything we've ever seen before. There's a substitution effect for lower skilled. By the way, when you break down the employment report and you look at lower skilled, some of the minority data around unemployment, you see some real dispersion, and it's part of why I think if you look at low middle income in this country, they're having a hard time. It's why even though companies are doing well, even though the economy's doing well, even the wealthy are doing well, who by the way benefit from higher interest rates, you have a low to middle income part of the population, which by the way, it's not like 4%, it's 50% of the population that's having a hard time today.
Rick, I guess the question with all of this is if on the headline level the issue are things like productivity, why would a 50 basis point cut help with that?
So there's a couple of things at play. First of all, if you take the starting point, Fed funds rate at 4 3/8, Inflation expectations, so we follow 5-year inflation expectations, are about 2.5%. 4 3/8 is the wrong price. If you got the funds rate down to, let's say you got it to 3.25, you're still above where inflation expectations are. There's no reason to keep it here. And, I go back to the same point. If you think about what is your constituency that you're addressing when you're the central bank, if you think about what's happening, gosh, there's a little bit of inflation pressure from tariffs, which is goods inflation. Well, goods inflation tends to be a moderate regressive tax in terms of low income. Why would we charge them more for the interest rate? For whether it's home equity lines, whether it's for credit cards. Meaning if you bring that rate down, you won't stimulate more inflation necessarily. It's certainly not going to impact the tariff transmission mechanism, but you would help a lot of people in the country that are struggling today and are getting, a bit of a regressive tax from tariffs in the intermediate term or the short term, but you help them in terms of bring down their cost of borrowing.
Rick, I just can't help but wonder. I mean, we've heard the president argue that the reason rates should come down also is because the economy is doing well and things like the housing market. Are you saying that you agree with the president on that front? And if that's the case, what's the risk that the long end continues to rise and doesn't solve the problem that rate cuts are supposed to address?
So it's a great question. So the first thing I would say, the housing market is stuck. Whether it's building permits, mortgage applications, new home sales, housing starts, we're at levels in the 60s, similar to the 60s and 70s when the population is roughly double the size. Housing market is stuck. What does that mean? You create a dynamic in the economy where people, if you want job mobility in a tougher job market, it's harder to move because you can't sell your house, particularly if you have a 3% mortgage. We need to bring down housing costs. We need to bring down affordability of homes. By the way, I've argued this on this show many times. If through the funds rate mechanism, the mortgage rate comes down, I'll get to the other part of your question. If you bring the mortgage rate down, you'll actually build more homes in this country so home builders don't have to subsidize the mortgage. You actually bring down shelter inflation, which has been sticky. Your point is well taken. Listen, as an investor, we like the front of the belly of the yield curve because you have, like today, because you have a steepening of the curve. Listen, there's a series of tools that the Treasury can implement, a series of tools that the Fed can implement to be thoughtful about how do you manage further out the yield curve as opposed to just we move the funds rate in moderate increments. There's a lot of tools at play to try and contain where the back-end interest rates are.
I'm going to say, Rick, that the administration and Scott Bessent specifically have been watching you on this program or maybe just reading your research, but they seem to want to interview you for the top spot at the Fed. Treasury Secretary Bessent has said he's going to start those interviews today. Are you going to Washington?
So I'm going to focus on the jobs report and what I do day in and day out to generate return for clients. I'm focused on what I do day in and day out, and I'm not. I'd rather not comment on that.
I'm sure that that's a focus for you, but if your country calls for your service, how do you answer, Rick Rieder?
How do I answer? So I'm going to focus on. I'm just not going to answer that. I'm focused on what I'm doing day in and day out. And listen, whoever ends up being chosen, and I've seen some very good commentary from some of the candidates that are out there. Whoever's chosen, there's a big discussion about Fed independence, and I'm a devout believer in Fed independence and what it does for currency stability, what it does for how people around the world think about investing in the U.S. I also think there's innovation and creativity and some thoughtful dynamics that I think the Fed can bring to the equation. Whoever that is, and I think there's a bunch of good candidates on that list, I think we're going to move to it in a direction that will see some more innovation, which I think makes some sense.
Rick, I'm just going to say Chair Rieder has a wonderful ring to it, and I will leave it there. Rick Rieder, thank you so much.
All right.
Stick around with us, and we're going to get
a little over 5 minutes.
After the
I think we got 7 minutes left.
Still ahead.
To
Labor
open.
Secretary Lori Chavez-DeRemer joins us live from the
For
White
all
House.
of you that's joined me, hopefully we can find a little move to finish off the week. But yeah, let's just chill. Wait for the open and we'll go from there.
technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
The 3-month average for jobs growth, 29,000. That's the lowest since the pandemic. The market reaction is one to rally. We're off of the highs, Matt, but we are still on track to close at a record with 2-year yields dropping to the lowest since 2022.
Yeah, absolutely. It's important to point out that the director of the NEC, Kevin Hassett, does say that these numbers will be revised up by 70,000 eventually, and that doesn't seem to be taking too much wind out of the sails of a bet. The market firmly placing bets that a rate cut will come in September. More next with BlackRock's Rick Reader plus Labor Secretary Lori Chavez DeRemer.
Let me break down our CapEx into the buckets that we spend. Big part of it is to expand our reach of fiber. You cannot wait until there is certainty to build that. These have long lead times that require you to have conviction about where demand is going. Another bucket is, as more people are on our network, we also have to add more coverage and capacity. It's almost like a variable expense. Third, we are modernizing our wireless network right now. Through the investments we're making, we are driving down our unit costs over time and providing more capacity to serve the demand that we think is coming.
Do you have less confidence in that 3-year plan now than when you first came out with it, given that some people are having trouble deciding how things are going to look in the next 3 days?
No, I really don't. I look at the nature of our business. It doesn't matter the economic cycle. This is a critical goods or service, and we have every confidence demand for it will remain. Will it be harder in a more challenged economic environment if that ends up being the case? Of course, but Remember, we are investing at record levels. Slight moderations of that would allow us to deliver a lot more incremental cash to the bottom line. So I have every confidence we're going to be able to deliver our guidance.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Bringing you up-to-the-minute geopolitical news wherever and whenever it happens.
Alright, because we're close to the open,
Canada, and this is
I'm just trying to identify areas here that we can work with.
Moments away from the start of trading, this is Bloomberg Open Interest. I'm Matt Miller. We had a very weak jobs number, less than a third of what we expected, and as a result, markets are rallying because they're betting on a rate cut. Odds on WIRP are over 111% right now. Nasdaq futures up 8-9
Stock opens here. We're probably just gonna keep rallying, you know.
Help to rally the market as well. The small caps, of course, gaining.
Need to wait for that first 15 minutes.
On the New York Stock Exchange,
I feel like US30 is going to be a much better choice today.
For a reason. The stock is up 600% in the past 5 years.
The reason why I say that is because I much prefer US30 spike lower. There's also a much clearer target above.
A small tattoo on her neck, so I would guess
like if US30, sorry, if it does start to pull back, you know, maybe we can work inside of this slight pullback here. What's this alert for NAS? We're pushing up. Okay. You know, maybe we can get a little pullback trade coming into there for US30, and then going long. Like that does have a possibility. Let's just say that's about 75 points.
Up just under 15%.
Where's the high?
It's going to help OpenAI create a chip available in 2026, and that puts it in direct competition with NVIDIA.
Okay, so that high, we have to target 1 to 2 at least.
All of that helping to ease concerns about slowing growth, Matt.
Doesn't look like we're gonna get any chances, guys.
On the run this morning, Tesla also rising. Stakeholders are offering Elon Musk a compensation
NAS has pulled back, interestingly enough. S&P still holding up.
$1 trillion,
Alright.
but there are some big ifs attached to
Maybe
that
we take a buy on the NAS, you know.
10 years. It includes growing the company's
I do want us to work inside this little pullback area here.
He would have to raise the market value of
The only problem is, like,
8 times. We're back with BlackRock,
you know, usually
I
need to wait for the first 15 minutes to close because, you know, markets can just range, can just spike. It can rally for the highs, rally for the lows, you know. It chops and changes a lot until it actually decides the direction that it's going to go into. Obviously, today's direction should be to the upside. Realistically, yeah, guys, it should be to the upside. But let's wait and see. Let's wait and see. Yeah. Like, let's say, for example, we take a trade here. Okay, that's about, let's say, 50 points. Yeah, we can get 2% here. The trend is a bit lower. I think one thing that you have to also reflect within these there's even a higher TP that we can go for. We can get a 1 to 2R quite easily. That can be stretched to about a 3.5 R trade. Like, there is a possibility here. I just don't want to break the normal rules and regulations of my setup. US30 is also dropping a little bit as well. Let me put an alert on S&P. So yeah, if we pull down to around that level, I don't think it's a bad area to go long on. Sorry. Right now, from looking at the seconds time frame, I can see that price wants to progress lower. Right, this is bearish price action. High, low, low, high. It does look like it wants to stretch lower.
Or about this market's willingness, getting back to our early conversation, to continue to fund deficits, if there are questions about institutions in America.
You know, I just want to get in at a right time or at a good time. It doesn't have to be a right time, just at a good time where, you know, the US 30, S&P are also going to rally higher.
Whether it's CPI, whether it's payrolls.
Look at Bitcoin.
What are we trying to do within our business? You can scrape
What's gold been doing? Still ranging. Cool.
Credit card data, hiring data, etc. You can do some pretty.
This might just pump from here, you know. This little 5-minute imbalance.
Analyzing the data in places like China.
Might just pump from there.
Look at what are your other sources? Power. What's happening with power supply?
I'll tell you what, even if, you know, price doesn't give us a good enough entry and it starts pushing higher, we can definitely just get a little bit more aggressive with the entries. Looks like it's about to hit. Okay, so it's hit that alert.
What we try and do is we use a ton of signaling data.
I'm gonna put another alert here.
To try and understand what's the broad landscape.
Another alert here.
And you generally get a pretty
I need to see and hear what price is doing at any given moment.
Listening to Tom Keene and Paul Sweeney on Surveillance this morning with Ken Rogoff, and he was talking about the importance of the non-farm payrolls number. I've always called it the granddaddy of economic statistics. Listen to what he had to say.
Jobs Day has always been the big number because it's the most reliable number that we get sort of in real time. Maybe now and going forward.
Alright, so here's the thing, yeah. If we look at the NFP, right,
if you still trust that institution. And also the author of the new
you had a slight pullback into here. For this provider on Pepperstone, we didn't actually get that test, but when I check my, where's my MT4? When I check my MT4 for NAS, we did get a test of that minute down candle. So we got this area. We got this area down here, and we got that 3-minute area as well. I want to try and work with one of them, but to be honest, it's not a bad area to take a trade from in terms of going long. It's really not bad at all. I just don't really want to risk much today, because the week has been really good, you know. It really has been really good, you know. For the start of September is phenomenal. I'll be real with you guys.
Watcher rather writes in wanting to know your opinion on Myron yesterday.
I'm just gonna watch this seconds time frame.
Is to have moderate long rates.
Do you know what I'm gonna do, yeah, guys?
What do you think that exactly entails? Is this a Fed that potentially?
I think this can definitely come down.
The Trump administration would do something like an Operation Twist, would buy long.
I do think this can come down.
They back up. What would that mean to have moderate long rates?
So, listen, I think there's a series of tools. I mean,
I do also low-key just want to take the position from here, so that I just can't be bothered with all the chopping and changing. The US 30 still looks pretty bearish. Okay, because I do think this can come down, you know.
Market pricing is according to what your
okay, there we go.
Opinion is going to be where you're going to move things. So there's a series of things that you can do. And quite frankly, I think, part of why I said, you have some more innovation. If you go back,
okay, I'm going to try and go for a little long from here. Again, I think this will probably come down, but let's just test the waters.
So, yeah, I mean, I think the idea that, could the Fed employ more tools? I mean, think about how we finance today.
All right, so I've just entered off of here.
How do we finance real estate?
My stop is at this low. The only problem is S&P can definitely drop lower, which can pull this a lot lower. But I'm in it. Right, so that's the setup on NAS. The secondary setup is down here. I don't think we're going to come for the NFP low. I don't think this low is going to be touched today. At least there's not enough information for me to say that it will get touched. Right? Obviously, it definitely could, because technically that entry is inside of the 15 minutes. Shouldn't have taken that trade. That goes against my
yeah, absolutely, and there's a lot to ask her about as well after the ProPublica report yesterday that suggested
that goes against
2 more mortgages. Listed
I think it'll be fine. I think it'll be fine, but that definitely goes against my setups.
That were 2 months apart. If that's the case,
but we're looking pretty good.
Not only what she thinks about this jobs report, but whether or not she feels she needs to resign. Because
all right, let me just post this up just for the people that are not on the live stream. Don't know why, but
no matter who you are, they consider that to be breaking the law. Certainly, Bill Pulte has treated as much. And no one, as he said, is above the law, and that would include, you'd guess, if it's true, Lori Chavez Serena, this according to ProPublica.
And a spokesperson did respond to ProPublica saying that it was her husband that had planned to retire there. But I guess what you're getting at, Matt, is this issue where it sounds like one rule for allies, another for enemies. We give her the benefit of the doubt. Should Lisa Cook then?
I feel like this has got one more drop left in it, you know. I can't lie. I think this has definitely got one more drop left in it. I don't think it's just fully gonna pop. If it pops, then sure, you know, we'll take it. But I think this has definitely got one more drop left in it. Just from looking at US 30 and the NAS, I think it's got, sorry, US 30 and the S&P, I think it's got one more drop left in it. 15-minute candle, yeah, 15-minute candle hasn't even closed yet. But let's just see, you know, I'm watching the seconds time frame. We're looking pretty bullish. If this starts to, you know, push higher and show more bullish price action, we can double down on the entry. Alright, I think, you know, we've just tested this 1 minute candle here. This can start dropping again. So let's just see. We realistically, we want to beat this M1 candle here. Right, we want to get a nice body candle above that M1 candle. That's going to give a lot more confidence to go long. Yeah, we need to beat this M1 candle. Got a message, let me see.
That 100% plus odds that we will get a cut. So real estate does well, materials, consumer discretionary, Matt. Again, everything positive for a total return so far this morning of 0.4%.
Yeah, I think fascinating that you have NVIDIA down 2 1/3% because it's such a heavy stock, right? It's worth 7.5% almost of the S&P 500, but Broadcom is worth 3%. So you could see that a 15% gain doesn't hurt much at all for that stock. Coming up, Lululemon slashing its outlook, disappointing investors for a third straight quarter. More on the yoga pants retailer next. This is open interest.
Let me see what this is at. All right, looking for this candle to close here, guys. Hopefully you guys took a little something here on the NAS. I know, Joe, you trade the NAS, right? Every time I read the NAS, I read it in your accent in my head. The NAS.
Differentiators between great investors and just mediocre investors. Because on one hand, you have to have confidence and conviction in all the work you've done, the decision you've made, that if you have a little stumble here and there, if you immediately are selling out, you're never really going to fully realize the depth of potential long-term success. And then on the other hand, if you're stubborn and you refuse to admit I'm wrong, you continue to think the market's wrong and I'm always right, then you'll get caught in some very, very difficult positions over time. So that ability to have a fresh perspective, take in the new information, even when things aren't going the way that you'd expected or to hope, and to really understand from this price point today, is this still going to be one of the most compelling investments or not?
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech.
All right, so right now, I like what NAS has done. Now, in terms of finding a re-entry, it's a little bit difficult. What I'm actually going to do here, guys, I'm going to take I'm gonna take a move on US 30 right now.
Here on Bloomberg. More than what you need to know, it's what you need to think about. Bringing you the latest in tech and AI news whenever and wherever it happens.
Nas this second's time frame looks really decent, but I've taken a move there on US 30 because it's just in a better position.
Joe Matthew and Kaylee Lines deliver news, insight, and analysis.
Okay, so if you guys didn't take Nas, you can take US 30 if you want to.
At 1 and 5 Eastern, only on Bloomberg.
Nas just looks really bullish, in fact. There isn't a very clean setup for us to look for a continuation higher. At least not yet anyways. Trying to see the seconds time frame here. We had a slight pullback into here. Alright, US 30 is now in profit as well. I mean, we could do a thing here. We could try a thing here still. Could do. We could take a long move here, even where price kind of is right now. But we're coming down very hard. Let's just give it a second. Just don't want to get too ahead of ourselves, but I think a continuation is possible, you know. S&P is dropping. Let me see what Bitcoin is doing. Bitcoin coming down too. Okay, let's just hold these positions for now. Let's not add any more risk, especially when we haven't actually progressed anywhere. The 15-minute candle just closed and I'm taking positions. Boy, yeah, I don't know what I'm on right now. I just need to chill. Because especially, you know, if you look after yesterday, you know, after we had that open, we had 3 p.m. right? We had a breakdown and very nice continuation higher. But I do think we can push up.
Both and execution. I think execution is really key here.
This doesn't look bad, but I just don't like what S&P is doing.
It's because they don't have enough newness in stores. They're not moving as fast.
Like if S&P comes down, it's gonna pull this shit all the way back down.
They say they're planning to, but it's
Dow Jones is clapping as well.
That we can see
Nas is most likely going to do something similar. By the way, I've moved my sorry, my US 30 SLs here. I'm gonna see if I can catch like a 1-to-1 on that. Nothing too crazy. All right. It's a little, maybe a 1-to-1 or 1-to-1.5 trades. 1.5. I'm low-key regretting the US 30 trade because, you know, I didn't need to double my risk for no reason. Alright. Nas needs to save the day. Nas looks good.
These are some of their casual lines. They just haven't been performing. It seems like what you see there is what you see everywhere, and that's not what consumers want to see. They want to see new things from Lululemon. They want to see innovation.
Hudam, if you live in New York City, you've been inundated with all things U.S. Open, and it feels like U.S. Open things have gone hand in hand with Lululemon. Lululemon seems to be putting a lot of dollars into marketing. I think they sponsor TFO. They've had this pop-up at the U.S. Open itself. Yeah. Is this the route forward for Lululemon to try to grab onto some of this viral marketing, or is that not enough? Is it the innovation piece that you're talking about?
I think they have to do both, right?
Guys, the aggressiveness in me wants to double down on US 30.
It won't increase their marketing spend. They said that they're going to hold their marketing spend at 5%
like,
of sales. And then
the aggressive side of me wants to, or the risk taker side of me wants to double down on US 30. But I know it's Friday. I just don't need to give it back. I don't need to give back this whole week. Risk it all just on a Friday. I don't think today's we're not going to get a reversal Friday today anyway, so.
I think if they can get the assortment,
gold's still jumping. But I do want to double down on the US 30, man. I feel like US 30 is going to jump again.
There are still tariff headwinds, right? Much of
How
the
much
cut
risk
in
is
the guidance
this?
that you saw yesterday
Okay.
was because of tariffs. They took their gross margin guidance down by 300 basis points.
What shall I add to?
190 basis points more than they
US
previously
30 or
expected,
NAS? Because NAS is
largely
moving.
due to the de minimis exemption that was taken away.
NAS is moving. We had a really nice move here. NAS looks really progressive. Yeah, NAS is getting out of here.
And tariffs. Coming up, investors are piling into gold ETFs as
All right, man. I was right about US 30 because, boy, it's moving now. All right, risk is looking good. Risk is looking good. Let me just put TPs on these things, man. As soon as it hits, just take me out of it. Get me out of there. Hold on. I'm just setting some TPs here, guys. The way this half-hour candle is printing, I would not be surprised, right, if the next half-hour candle comes all the way down again. Like, unless this candle flips bullish and it's a strong bullish close, we're probably going to come all the way back down again. That half-hour candle does not look good at all. And the S&P still doesn't look good at all. Like, look at this half-hour candle. This can still drop. This can still drop, guys. I would take it easy. This can still drop.
It's what you need to think about.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizon Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Nas is moving, guys. You know, Nas is really trying to move. Nas is really trying to move. Ooh, that 2-minute candle looks clean, guys.
Only on Bloomberg.
You see, when you have candles like this, they look really, really good. I like these type of candles. Not necessarily waiting for it to push up and then pull back to it, but like once you get a candle that pushes out of the candle's range, you have the next candle that tests the body of the candle and it expands. I really like those kind of setups. But Nas is getting out of here, guys. So if you didn't take Nas, I don't know what you're doing. If you're sitting here with me, bro, just demo trade it if you have to. You know what I mean? Just open up a demo. Everyone should have a demo and just take the trade, man. You can go to your account and change the flipping. You can reset the history if you want to. Oof, oof, we're getting some volatility. We're getting some volatility, guys. Ooh. See, this is what I'm saying about S&P, man. It's like S&P just hasn't moved yet. We're getting some volume, man. Just gotta chill. You know, with Nas, the stop is far away enough, whereas if we come down here, we were just wrong. Do you know what I mean? And we entered down here, which was, you know, the much preferred entry in the first place anyways.
When gold rises, you want to jump into that too, right? Yeah, and I just love the irony of stocks at an all-time high and gold at an all-time high. That
does not look pretty. It's that S&P, man. It's that S&P. It's that S&P. Alright, so S&P could start to jump up from here, but this might just keep coming down, man. I have not gone break even yet on this move, so if it hits my stop, then that's a SL. Even after going into profit.
Yeah, they're a factor. You know, people I think overrate.
But I'm holding the line, man. S&P can start to push up from here. You know, this whole area, if you look at the minute one, starts from up here. So realistically, you can start to get a push up from here. Right? obviously, if I was looking to take a trade on the S&P, I would try to wait for a much better price, like lower. So this is why I'm saying, like, you know, the S&P definitely can drop lower. It can, you know, pull US 30 lower. It can pull Nasdaq lower as well. Nasdaq's closure over here is not bad.
Was the trade all year, and anybody who's been buying both is thrilled with the jobs report because it means rate
Let's
cuts,
see.
which is usually good for gold and stocks.
I wonder why, though.
Just holding the line right now,
we
man.
have the big gains in gold, even though you mentioned the geopolitical uncertainty, even though we know this administration loves gold, at least as a decoration. Isn't it normally supposed to be a hedge against inflation? And if you don't think that we're going to see inflation, why would you buy gold?
Yeah, you know, gold's track record as being a hedge against inflation is a little shaky. I personally think a lot of people were buying it as a diversifier. You know, just in case the tariffs were worse than we thought, just in case World War III broke out. Like, I just think it was the hedge you bought while you kept buying stocks. And this is something we've seen in the past. We saw a little bit of this in 2020 as well. In fact, that was the record year for gold flows was in 2020, 34 billion US. So we're at 24 billion.
There goes the S&P.
From breaking the 2020 record. We'll see if it gets there. But that's what I think it's for. It's more of a diversifier. It's not even a great stock hedge. It's zero correlated, and I think it does its job. And this year, like I said, if stocks
I think the stops are enough to hold through all the chop, but we'll find out. See what this is.
In my opinion, and I think people use it mostly just to diversify.
All right, Eric, thanks very much. Eric Balchunas there, your ETF expert. I think he's everyone's ETF
Literally the world's ETF expert.
This guy knows more about ETFs than anybody in the world. And that's why he co-hosts our ETF show. Bloomberg ETF IQ, you can see it every Monday at noon New York time, 5 p.m. in London. It's one that you don't want to miss.
Yeah, because the money is flowing into that gold ETF, and I wonder how much of that is also just not flowing into bond ETFs. He's talking about it being the hedge for stocks because treasuries haven't been working as the hedge for stocks. Just the volatility there, but I should say that with this move this week, you actually have yields much lower on the week, significantly lower at the front end, the lowest since 2022 after that board data.
I should point out, Bitcoin is rallying today as well. Digital gold is up 2.5% to $113,000. So that line of code is also incredibly valuable.
Yeah, but my parents aren't going to Costco to buy Bitcoin.
No,
so just
they buy it on the app, right?
Yeah, of course. Yeah, my parents absolutely are doing that.
Coming up, we'll talk to former Fed economist Julia Coronado, get her take on this jobs number.
Okay, let's see. Where are you gonna react from? Like, notice how, well, what I am noticing is how Nasdaq's holding, right? Nasdaq's really trying its best to hold this level here, right? Even though US 30 was up here when Nas was over here, right? Even though we've come down, what's US 30 doing? It's really trying its best to hold this level, right? They're all trying their best to hold higher. So I think we got a good chance here for the long. We just need to be hopeful that the SL is, you know, in a good area for both the Nasdaq and US 30. Obviously for US 30, I moved the SL a lot lower because I just, bro, like, I don't really trust US 30. US 30 can be a bastard sometimes, you know. So, all right. So S&P has finally approached, I think it's a 2-minute area.
Let's talk about this villa.
All right, we want to see S&P start to push up now, you know. If it doesn't, then we're cooked. We're cooked.
First independent life in the farmhouse, and I built it by the memory of the farmhouse.
The aggressive side of me, guys, wants to double down on US 30 right now. Like right now. I want to go heavy on US 30. I really do. Let me see this half-hour candle. Okay, so what I see with this half-hour candle is when the next one opens, which is in less than a minute, I think if we can get one more run of the lows, right, let me turn this off. If the next half-hour candle, let's say it opens somewhere around here, we push down, we make the low the half-hour here, and then we close somewhere here, I think the next half-hour is going to be bullish as well after that. So what I'm saying is the new hourly candle as well could take out the prior hour's low and then push up. Right, obviously we're trying to envision where this 4-hour candle could close, you know, and if this drops lower, like it is a slightly better area to find an entry. But the thing that I'm saying is this wick low that we've had, I think that's going to be intact. If we take out this low, I'll be very surprised. I'll be very surprised, but I wouldn't be surprised if we actually take out the low one more time, is what I'm saying. So I'm holding, but I do want to re-enter US30, man. My gut's telling me like, bro, US30 is about to get busy. Alright, new hour, new candle. Let's see. I got eyes on S&P, what it's doing. See, this price action that we've had on NASDAQ has not been bullish continuation, right? Or showing signs of bullishness. You know, over here we had signs of bullishness until it broke down when the S&P started dropping lower. So let's see if our SL is sufficient. You get what I'm saying? Come on. You don't need to push down anymore, Nas. Come on. You would think, you know, you would take some profits when prices pushed up pretty much double. Did it do double? Yeah, it did double. That's hilarious. Anyways, we're not going back. We're just gonna watch. If we get stopped out for this one, then I'm just gonna put my hands. Sorry, I'm gonna sit on my hands until next week. Unless there's like something that just looks amazing, you know what I mean? Because the first hour, wow, S&P is really coming down. Hold on.
Of the Supreme Court matter to you? I want people to have trust in the court, and that's why I wrote this book.
That doesn't look good at all. Okay.
How the court works. I wanted them to understand
how we see that 15-minute candle.
How we go about making our decisions, because the court belongs to every American, and I want Americans to
you know what?
They have a stake in the court, and they understand what the court does.
Last chance saloon, man.
Is not the same kind of work that Congress does, and it's
if we take out this low, I'll be so surprised, guys.
Those are the political branches.
That's the only thing. If we take out that low, half-hour candle's looking crazy on the S&P.
New York State Forest Rangers saved the day when some
let's see. If we can hold. Obviously, we're just seeking out the weak holders. Right? If this does in fact turn bullish, then right now, you know, as market's gone up, okay, if we look at the NASDAQ and thinking about psychology, right? As NASDAQ's been going up after the open, people, investors would have definitely looked to buy, and a lot of them would have bought as NAS has been printing up. And the fact that we've printed this bullish looking candle, there would have been more buyers, right? And now that we've slipped and we dropped beneath the opens low, right? You have to understand that a lot of individuals would have taken buys here, put their stops here, right? Or maybe even put their stops where we've put our stops, right? And the whole time as price is coming down from a position of profit, you know, in their mind, in terms of their psychology, like, damn, I don't want to lose this profit, or damn, I've gone from being in profit to now being in drawdown. Okay, all of this fighting with their mind is going to tell them close, man. How can you not close or take profit? Even I did it myself a second ago, you know. I was looking at the highs like, damn, I just gave away 2% just to be in drawdown right now. Yeah. So it's all the exact same thing. And sometimes I end up reminding myself like, yo, like, the SL, is it in a good place? Yes. Is the risk too much? No. if so, why does it matter? Like if those are all answered, then why does it matter? Do you know what I mean? So even right now, it's not looking good. Mainly the S&P, because that's why I mainly use as my driver. But I believe my stops are in decent areas, and if it hits those stops, like I said to you prior to us getting any of this price action, before any of this price action was printed, I said to you guys like, hey, I'm gonna look to take an entry here, but if this area fails, we'll probably get an entry down here. Why? Because I don't see us coming for NFP's low. If we come for NFP's low, then I'm wrong. Then what do you want me to do? Like, it is what it is, you know. But I don't think we're gonna come for this low. Right. I just don't think we're gonna come for it. So right now we've just taken out the prior hours candles low. So I want to see us really start to push up now. Give us a bullish hourly candle. Even give us a bullish half-hour candle too. I think we've pulled down low enough. USD is still holding, you know. If we don't get anything here, that's it for the week, guys. So I'm gonna shut up and we're just gonna watch price.
Ever since I've been dating Taylor, life has been fun. You know, it's been exciting. Obviously, a lot more eyes, and I accept that. But it's just I'm living life, living on a high, I guess. Yeah.
Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is
S&P's holding. Yeah, Joe, it is holding right now. But I'll be honest, I think S&P will probably ruin the party.
Breaking market headlines.
Like, if I'm being completely honest.
Could we see a market
Like, gold's also pushing up. Like, I don't usually see gold push up and the stock market push up at the exact same time. They usually do the opposite. So I don't think this will actually even do well. But
YouTube and Bloomberg Originals.
I don't mind taking that out.
Good Friday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We are streaming live on YouTube as well. So head over to youtube.com.
If we take out that low, we'll see if there's a better setup. If there is, great. If there isn't, then cool.
On the jobs report, Carol Pepper, founder and CEO of Pepper International, give us her thoughts on these markets. Janet Lauren's going to join us.
It would be a shame though. Yeah, S&P's gonna make us hit stop.
Northwestern resigned. Scarlett, I mean, the pressure
Ooh, wee.
It's working if you're
Came a tickle from SL.
Absolutely. So we'll get the latest there.
I think the spreads just saved me this time.
Northwestern. Liz Hart, president of Leasing for North America at Newmark Group.
Yeah, we're done.
Commercial real estate.
All right.
And then the office space probably is bottom is what I'm hearing from a lot of people, but we'll check that out.
All right.
Yes, lower rates will certainly help. Let's kick this whole thing off as we do with John Tucker in our Bloomberg Business.
So last move I'm holding is US30.
Business Flash brought to you by IBKR.
And then let me see the risk on that.
September on record at IBKR forecast trader. The S was recently at 11%.
It's okay.
Start predicting today at ibkr.com/forecast. The last trading day.
Yeah. This looks like it will come down.
It's not rocket science. The bets are on the Fed's going to cut.
Like it's difficult because Joe, I've never seen, I wouldn't say never. I'm in S&P. If it hits a loss, I'm done for the week. I'm not about to take, maybe, I think you mean lose my gold profit. Yeah. It's not worth it, bro, honestly. Bitcoin really cleaned up. Bitcoin really cleaned up. I was even surprised that Bitcoin moved so quickly, because even in the description when I posted the setup, I was talking about days to weeks, because I thought this would take some time to play out, but sharp, you know, went to bed, woke up, sharp again, like damn, okay. So
the index, the Dow Jones Industrial Average up 35 points. That's up 0.1%.
all right, so that's now just hit stop. I'm gonna set some alerts and then look back at this if we're in a slightly better area. USD is still holding, which I'm so surprised about. Right, so right now, right, this is the last entry here, right?
We
To
check the
cover the
markets
low
for you
is
all day
about,
long
let's
right
say,
here on
65
Bloomberg Radio. I'm
points
John
to
Tucker.
go that high.
That is your Bloomberg Business Flash.
All right, I'm going to look for bullish price action from here. If we don't get it, that's it. Okay, so I'm going to leave you guys with this setup here on the NAS. See if we can get some bullishness from here. I'll probably wait for confirmation just because we have just taken that loss earlier. Yeah, I think that'll be it for today, guys. Yeah.
Yeah, first one on my list is Lululemon.
Yes, that is also coming
which is
down as
actually the
well.
best performing stock in the S&P 500 index this year, so that's why we're talking about it. It's down 55%
Yes, that
this
is
year,
also coming
another
down.
15% today. So yeah,
Yeah, I'm gonna leave it at that. It's been a good week. It's been a good week. So we'll go from there. All right, Joe Gift. I'm not too sure who the last fella or lass is that's been in the live stream, but thank you for joining. If you guys haven't liked already, just drop a like on the stream. Helps with the algorithms and whatnot. And hopefully we can get more people in here as time goes on. Money Day. I will see you guys next week in the Discord. Peace.
saying that he's disappointed with their execution. So